to be sitting on stocks. So a lot of folks liquidated at the lows. But we know that whenever the VIX is above 60 and falls below 30, you've made a decisive low. And now visibility is better. Tariffs aren't as bad as we expected, and the inflation impact actually has been very muted, and actually outside of tariffs, underlying inflation is actually much lower than people expected. And I think the Fed is, even if they're holding now, the bond market doesn't believe it. If you look at the 2-year, they think the Fed's 2 cuts behind. The 10-year is now down to 4.2, which means the Fed can be more dovish in the next 12 months, and that's a tailwind for stocks.
Can you explain how we have this big, beautiful bill, which people are saying $3.3 trillion added to our deficits and everything else, and yet you're looking at the 10-year coming down?
Yes. It shows you that markets don't view the U.S.'s debt sustainability in the nearly 10 trillion. So stable coins can grow. A lot of stable coins transactions happen outside the U.S. So dollar dominance could actually be much higher in a stable coin world. But the main thing is it's at 4.2% the 10-year. And I think that means the bond market isn't as concerned.
Right, but we thought that the bond vigilantes were going to say, no mas, we're not doing this.
Yes. I think the bond vigilantes are essentially correct. The U.S. should not be running a deficit like this. But for whatever reason, we're not at the levels yet where debt sustainability is a question.
Could that change? It's weird. When these sentiment changes come, they usually come without warning.
That's right. Bond markets run on confidence. So there may be a moment where the bond market loses confidence. As long as the dollar is...
Jamie Dimon's worried about that.
Yeah, and you should pay heed to Jamie Dimon. The Fed fastest hikes in history, and then we had the tariff shock. So 5 shocks in 5 years.
5 years, yeah.
And earnings kept growing. If this was like a stock, we'd say, look, if you tried to kill it 5 times and it still grew earnings, we would put a much higher multiple on it.
Jim Chanos was talking on Bloomberg the other day and said that what we're seeing right now in AI reminds him of a lot of ways in the dot-com bubble. Now, the numbers and the earnings are very different, but he was talking about the Ciscos and the Lucents and some of those companies that were selling the things to shore up the internet. And I think he's looking at...
So the purchase of the equipment was based on creating web pages.
Right.
AI has use cases like replacing workers. So you have true dollars for a company to measure how much they're saving. And so...
Explain a little bit?
Yeah, glad to. I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025 is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that's...
Explain why that would be.
Well, Ethereum is a proof of stake network.
Right.
So unlike Bitcoin, which is proof of work and miners do all the work for you, and that's why you have decentralized trust, in Ethereum, it's important for these entities to essentially validate transactions. So by becoming a staking entity, you're sort of securing the fidelity of stablecoins. So you don't want a stablecoin like USDC or USDT to be on a blockchain that's outside the purview of the U.S. And so I think Ethereum is a high quality, the second largest blockchain network, and it's over 51% of stablecoins, and 30% of all fees on Ethereum are actually stablecoin revenue.
So we even have the Treasury Secretary, Scott Bessent, talking about how stablecoins could be very positive. He likes them, likes to see what's there.
These stablecoins are the 12th largest holder of treasuries. They'll become the number 1 holder by then. U.S. dollar dominance is 27% in GDP terms. It's 57% of central bank reserves. It's 80% of financial trading transactions. It's 100% of stablecoin denomination. So by getting to $2 trillion, you're ensuring dollar dominance. This is very good for the U.S., but $2 trillion of stablecoins is a lot of network fees for Ethereum.
So BitMine Immersion, what you're doing is a $250 million private placement, which is all going to be put into Ether?
That's right. We created a carefully curated list of investors to bet on this. If you look at the press release, it is
Trading,
well, yeah. The strategy of the company is going to be based on how much Ethereum is held per share.
Okay.
And as of today, it's $4. And the company, as we explained in the press release, can increase its holdings of ETH by, getting yield from Ethereum, doing
in half the time. To Senator Thune and Speaker Johnson's credit, they've moved this thing along. They're following President Trump's leadership. My boss, Secretary Bessent, is working tirelessly, meeting with everyone. She was a point person, obviously, with the Big Six. It's moving along great, Andrew. So,
what did you make of the comments over the weekend? We've talked about him, too, on the broadcast today, by Elon Musk, who called this bill utterly insane and really went after it more because of solar and wind and some of those things. And obviously, President Trump's made some comments about that as well.
If we don't pass the bill, we're going to have the largest tax hike in U.S. history, and the economy is going to roll over. Because what we have in the bill are very pro-growth initiatives. We're doubling the small business expensing. We're increasing opportunity zones. We're making the President Trump tax cuts permanent. Also, is excited about what the
By the way,
business...
they seem to be even what we thought of as the bond vigilantes coming out in force. They're not today. It's actually the opposite.
And the other thing, what I would tell Mr. Musk is, if you look at this one big beautiful bill, the tax relief to families is huge. It's $600 billion in tax cuts. The CEA is estimating the average family could receive upwards of $10,000 plus, almost $11,000 in tax benefits per annum.
So CBO says this is a $3.3 trillion problem, effectively, right? You say it's what?
So CEA, my colleagues have estimated it's going to cut the deficit by $2 trillion. Here's what I could tell you, Andrew, and this is
but that's a massive delta between these two.
This is right. This is my big issue with the CBO. Here's the problem with that. That assumes the 1.8% growth.
Right.
So you're going to get a couple of trillion minimum more in revenue just on the growth. And let's not forget the tariffs. We could have upwards of $300 billion in tariff revenues this year. That's like the icing on the cake.
In tariff, do you still stand by the growth questions?
Oh, yes.
There are questions about inflation with the tariffs. I think probably the bigger questions are about questions of growth.
Yeah, no, because right now, as we noticed in the first Trump administration, most of the tariffs were absorbed by foreign producers. That's exactly what's happened. Because not only have the tariffs not shown up, the numbers have actually been better than expected. What this bill will do is, as it was under the first Trump administration, we saw rising lid model, the 10% tariff on everybody but China, and the two reciprocals are 10% and 60% on China. That's what 60%. Well, that's what President Trump ran on.
Right.
And I'd found that a very static, incorrect analysis had a very marginal increase in the price level, not accounting for either foreign exchange adjustments or the fact that producers would absorb it in their margin. So I'm going to push back that that's really not going to be a factor.
So you think whatever happens with trade is
President Trump is going to negotiate hard. He'll work whatever's in the best interests of the American business and consumers. And I'm optimistic we'll get something ultimately done.
How quickly do you think that happens? Because now there's a sense that maybe we finally are closer. We still haven't gotten any major deals yet. You know, the president spoke just over the weekend about the prospect of something around TikTok. That's always been considered a bit of a chess piece.
Right.
Buying treasuries are the folks behind stable coins. And that's something we haven't really thought about in the quote-unquote marketplace of folks who buy treasuries.
Let me just say, just to backtrack for a second, the Treasury International Capital Reporting data has shown record demand for U.S. assets. And the BIS wrote a really interesting piece recently that said any of the selling that had come out of Asia was just hedging. It was not due to any waning of U.S. demand, which remains incredibly deep and robust. So the stable coin is a separate issue, which could, as the Secretary's mentioned, increase demand without question as that market grows. So we'll see. But I mean, again, coming back to where we were in April with the tariffs, everybody had this, not just Trump derangement syndrome, but tariff derangement syndrome. And I think even now, even with your discussion with the CEOs, I think people are probably not fully taking a holistic approach in terms of what the bill will bring for growth and how the president's been negotiating.
Well, that's the other question, sort of, does this...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.